Hey everybody, welcome back to another episode of A Millennial's Guide to Real Estate Investing. Today I have Reed Goossens on the podcast. I actually saw him present it back in Manhattan Beach a couple months ago about some multifamily deals that he was doing, so I'm really excited to have you on the podcast today.
Antoine, thank you so much for having me, mate.
Absolutely. So yeah, give everybody a little bit, since I know a little bit about you, tell everybody a little bit more about you, what you do, what's your story, and how you came to where you are today.
I know we only got half an hour, mate, but the story might take longer than that.
Cliff notes.
You can. Yeah, the people who are listening, clearly that my deep Southern Texas accent, down under there. So originally from Australia, moved to the United States back in 2012, and moved here really for the love of two things, which is one, my wife at the time was my girlfriend, she's American, and two was New York City, and just I wanted to live abroad as an expat. In another country. My background's in structural engineering. I graduated in 2007. I worked for a better part of a decade in structural engineering until I've found financial freedom in the last 2 or 3 years through investing in real estate. And my whole story is that if I can move halfway across the world, I quit my job in Australia. I just wanted to give it this thing a go here in the United States. And the original idea was just to move here and live as an expat in New York City, achieve that, and quickly realized the barriers to entry here in the United States real estate market are a lot lower compared to my home of Australia. And within 7 years, I've achieved financial freedom. I buy US multifamily, large multifamily, over 150 units at a time. I currently control about $175 million worth of US multifamily. The portfolio has grown to 1,700 units. And again, I've done it all from I started with buying one triplex in upstate New York when I first moved here in 2012 for $38,000. I had no network. I didn't go to school here. Didn't have family, had very limited resources. I am a millennial. And so if I can do it, moving halfway across the world, then so can the average listener who's listening to this show. You just got to get off the bloody fence and get going.
Yep. I agree. Awesome, man. Great story. So let's talk about that $30,000. So you were living in New York, right?
Mm-hmm.
Did you have a full-time job? And
Yep.
Okay.
Yep. So on that for a little bit, I moved here without a job. I came on a tourist visa, and I had to literally pound the pavement. I walked into engineering firm after engineering firm, and I purposefully looked at engineering firms that were less than 30 or 40 people because they wouldn't have HR. If they don't have HR, they wouldn't see, all these resumes out in the workforce. Oh, he's got a degree from an Australian university. Trash. And that whole thing that Tony Robbins says, it takes one yes to change your life. Well, I just kept going, and I had a big A4 piece of paper I'd handwritten all the engineering joints. And I just kept in. And eventually someone said yes, and that was so I had to get a job. Yes, to your answer your question. And then within 2 weeks of being fresh off the boat, I'm at my first New York real estate networking event, the REIs, the Real Estate Investor Associations. And wow, I was blown away at just the sheer volume of content that they provide as an awesome grassroots education platform. And anyone out there listening today, start there because that's where I started. And it was just like, what I would pay a guru thousands and thousands of dollars in Australia was readily available at these REIA events on a monthly basis, on a weekend basis. And it was just so much information that I was so grateful for. And I was paying $30-$40 to attend these events for 3 or 4 hours at a time. So
love it.
Yeah, that's how it got started.
Okay, awesome. And then so you started going to those networking events. You had a job now. And then what made you want to go and buy that? How long did it take you, first of all, to buy that first? Did you say it was a duplex?
It was a triplex, actually, and it took me about 6 to 9 months. And just, Antoine, just a bit of a backstory. I picked up the book Rich Dad Poor Dad in 2009. So I'd been self-educating myself for a period of time in Australia. I was going to do I had some money saved up from my engineering job, and I was going to do a flip or a lease option or something in Aussie. But I really had that desire to move abroad again. So spent part of that money that I'd saved to move to America, and the rest of it, I realized I could pay, you couldn't use $38,000 in Australia to buy a house. And I was like, wow, I can buy a $38,000 property in upstate New York. I was like, geez, that's crazy. And so the whole thing was that I remember reading my nose stuck in a book on the subway to and from work. And I at this point, it was mid-2012. And so I'd been really educating myself for nearly two and a half years now of real estate, knowing the powers of it. And I just had to get started. I was not going to get to financial freedom if I kept just reading books.
Yep.
And now, don't get me wrong, those listeners out there, education is key and paramount, and you've got to start with that. But I've been educating myself for 2.5 years, and I was just like, I need to get started.
Yeah.
So found a market where I could invest in, but was within a driving distance. And I remember catching the Greyhound bus from downtown Manhattan every weekend, and I'd go up on like a Saturday morning. I'd have a local broker that I would meet, and he would tour me around all these little deals.
Wow.
And so
Jeez.
I had no car. I just did it. I just knew that I had to get started. And it wasn't about the glamour of, getting financially free with one deal. It was just about getting my bloody feet wet. And so it was a market that I could afford. I could get there within 4 hours if anything went wrong. Obviously, I couldn't afford New York City. That's how I got started.
Wow.
I just chose a market that was, again, from where I come from, guys, you don't have the same. The barriers to entry is so much higher in Australia. You could not buy a triplex for $38,000. However, I did learn as a dumb Australian what a ghetto was, and that's why that's $38,000. However, you don't get to deal number 10 without doing deal number 1.
Yep.
So that is really, it got me started. I learned some lessons along the way, but it got me going, and that's the whole point of this thing.
Got it. Love it. And then did you buy that thing with cash, or did you conventionally finance it? Or
so fresh off the boat again, no idea what credit was.
Finance. Yeah.
The word credit in Australia, there is credit worthiness, but it's not like a score that you have that was not Halifax, but whatever the scoring system is. They don't have that in Aussie. And so I was like, what the hell's a credit score? It's like, okay, you've got to start a credit card with your own money, put $1,000 down, then we'll start building credit over a period of a year. So I approached local banks, said, hey, I'm going to buy this house all cash. I'm going to put a bit of money into it, put about $5,000 or $10,000 into it. And then over a period of 6 months, I was showing this local federal credit union called First Niagara Bank that I was depositing rental checks into this account that I started.
Yeah.
And I was saying, hey, guys, look, it's clearly working. I'm getting rental checks. Can I get some financing? They just gave me all they did was give me a $25,000 line of credit, collateralized by this house.
Yep.
And that $25,000 was able to make me go and buy deal number 2, which I bought for $45,000. Yeah, all of a sudden I had 5 units, and but still working full time, still grinding away, still getting on the Greyhound bus. It wasn't the taking off like a rocket in terms of financial freedom. It was making $700-800 a month in cash flow, maybe on some shittier months, maybe less, but nothing to quit my job over. So that's really where I got involved in syndication. I'm sure we'll get into that in a little bit.
Yeah. Okay, cool. And then so you did, by the way, did that second deal, did you buy it in the same neighborhood, or did you get smarter?
Different neighborhood. But it was, I called that second deal, it was the ATM. There was some immigrant family as a duplex. They paid on time. It was $1,300 gross a month. I remember that. Yeah. And it was paid on time every time, and had no issues with that property.
Got it.
And I eventually sold both of them. One because the first one had a drive-by shooting at it, but the second one just because I needed to free up some cash to build my business. So,
got it. Okay, cool. Yeah, because you're in an interesting position. So I'm an immigrant too. My parents brought me to the U.S. in 2001 from Canada. So trust me, we know we were taking the bus everywhere. We couldn't even get a car. My brother was sick, and we had to get on the bus with he wasn't sick. His ear started bleeding, and because it almost fell off. And we were on the bus with my brother's bleeding ear going to the hospital, and we didn't even know about health insurance. All that kind of stuff was just brand new to us. So trust me, know how it feels to be in that predicament. And then as you were learning then about real estate and real estate investing, and especially about financing and financial leverage, then is that what made you get out of the residential space entirely, or did you keep doing that for a couple of years, built up a good credit profile, and then go into multifamily?
Good question.
What was your plan?
Yeah, well, there was no real plan. It was sort of like, okay, got these 2 little properties in upstate New York. Yeah. I then went and bought a house in Philadelphia with a business partner, and we flipped it. It was a huge flip and ended up going badly. But what it really happened was actually a buddy of mine from Canada. I studied civil engineering within Australia. He came down, I think, in end of 2013 to New York City, and we went out for some beers, and it was around Chrissy time. And I said, oh man, I've got these 5 units upstate, and I've got this little property in Philadelphia. I'm about to start flipping. Sum total maybe $250,000 in portfolio. And he's like, man, that's awesome. I just closed on a 70 unit deal. And I said, 770? And he's like, yeah, 70. And I was like,
Wow.
how the hell did you do that? And he said, well, I got seller carryback finance. I had a mentor who helped me, and I got 3 or 4. I got my mum and dad to pitch in $100,000. I think that to come up with like $500,000 between like 5 people, which was $100,000 each. He was working as a full-time engineer, so he had friends with some money, and they went and bought this 70 unit deal. And I was like, oh, I'd heard about, and he was applying the same technique, which was buy the property, spend $5,000 a unit, increase the rent, which is what I was doing on my triplexes and duplexes. But I wasn't seeing that bump because it was a resi, and the banks don't look at it like that. The banks don't look at it like they do on a commercial side, where if you increase the rent on $100 times 70 units, then whatever that cap rate is, you're going to obviously force the value. So that was really where the penny dropped, and I knew that I was coming to the end of my tether. I'd been putting off for a long period of time getting a mentor. I'd been putting off a long period of time spending that money to take me to that next level. And so really it was that one conversation. I said, screw it, I'm going to go and find a mentor who's doing this. And I did. I found someone quite cost effective at the time. And from there, I started building my own brand, the Investing in the US podcast, which is my podcast. And because I had something to say, right? I had this weird story back in 2013, 12, 13, a lot of international money was coming to America. That still is today. And there's no one in the podcast space talking to those folks. So I really niched hard at the beginning. Over the last 4 years, I built this brand, and I've obviously pivoted to being more inclusive of everyone, not just international investors. But I went out and started the brand because I had to attract investors. If I attracted investors, I'd be able to use that money to partner with my mentor, my coach, and ride on his coattails for the credibility in order to build my own credibility.
Love it.
So that's how it got started.
Love it. Yeah, and it's also very interesting that you started putting yourself out there because you knew the long-term game as well was, hey, I'm going to need an audience. Here's my audience. Here's my niche. I need to start talking to them now so that the next 12 or 24 months I can go and buy the 150 unit building. So it's also a really important point that you said that I want to make sure people hear. It is, getting yourself out there and just documenting your journey. And even though you may only have 5 units in upstate New York in the ghetto, you're still going out there and talking to people about what you're learning and bringing on people and educating people so that you now have an audience so that you can become, start bringing in funds for your deals and stuff like that. So that's a really good point.
And the mentors are really important, because without that mentor, I wouldn't be able to build that credibility.
Understood.
Because the first couple of deals that I co-GP'd on, these are deals outside my portfolio today. I was just being a co-GP. I was bringing some money. I was doing some underwriting, and I remember trying to raise my first $250,000 after building a podcast for 6 or 7 months, and I thought, I'm going to easily get $250,000. And I remember approaching 50 people, and only 3 people ended up investing, and I think I ended up raising $125,000, and it was just a stark cold shower that I needed to grow my email list. I needed to grow my influence and to attract more investors to do more deals.
Got it. So, love it. And then so how long, so you signed up for that mentor, you started putting yourself out there, started working with this, which is a great thing that you started working, with that mentor and kind of ride his coattail, like you said. And then at what point did you go out and do your own deals, or when did you feel comfortable? Because, it's different when you're raising money for somebody else's deal and you can put that in your marketing, right? So, hey, well,
that's where I started, right?
Yeah, exactly.
So I think the first deal was in early 2004. We did 2 deals in 2014 and then another deal in 2015. And it wasn't until 2016 that I went out and started branching out on my own. So by the time I went to take that jump and that leap of faith, and it was because I wanted to start doing my own deals and control more of the pie, that I wanted to do more deals. And I'd done, we'll call it roughly 1,000 units as a co-GP. Over a period of about 2 years, and then went out and was starting to underwrite deals, 50, 60 units in Texas. It was trying to find deals, but it was missing that really crucial part, was that business partner who had boots on the ground and that sort of broker relationship, which I was lacking, living here in Los Angeles. And, I had my back end system set up with my underwriters underwriting constantly, but I couldn't get that first deal done. And I remember we underwrote like 60 or 70 deals, and I had to partner with someone on the ground in order to get that credibility. Because again, if an Aussie's calling up to these brokers in Texas, it's like, who the hell is this Australian guy calling from LA about these 100-unit deals? And it was finally we got a 192-unit deal under contract.
And that was the first deal you did by yourself?
First deal I did by myself. But remember, if you listen to the timeline, there was 2.5 years in there of co-GPing.
Oh, yeah.
Like I was learning.
Lots of learning.
It was doing full-time jobs. It was trying to underwrite my own deals, doing the podcast, doing my, being a good, boyfriend at the time, now husband. Like, it's all this, life happens, and it was a lot of freaking hard work. And people listening to this show, I'm sitting here talking to you as rosy and cheerful, but there was a lot of freaking hard work, a lot of long hours, and there's still a lot of long hours. And I've only achieved financial freedom the last 2 years, but without that, I also, in that time, I was able to jump from my structural engineering job and start working for a developer here in Long Beach. If I still had to continue to my W-2, I thought,
wow,
screw going and being an engineer again. Let's go work with a developer. And so I went and worked with him for 3 years. And that, again, I was just surrounding myself with real estate, doing real estate on the side with my mentor, doing it as a day job, that completely accelerated my trajectory.
Yeah, immersed yourself in the industry.
Every facet. And that's what I'm saying. If I had to keep working because I needed a green card to stay in this country until I got married.
Oh, that's what. Okay, that was my next question. I was like, were you doing the W-2 for financial reasons or for green card? Yeah, so both.
Both. Because up until this point, up until I got married, we Australians have a really great reciprocal visa with the United States, which if you just have a white collar job, like structural engineering or project management, you go to university, you can have a 2-year working visa here. It's renewable indefinitely. So I had all these complexities that the average American didn't have. I wish I could have gone out sooner on my own, but it's my journey, it's my story, and I'll own it. So,
I love it. I love it for sure. And then so you were actually, while you were doing these co-GPs with those 1,000 units over that 2-year period, you had a full-time job on top of all that? Jesus. Wow.
Correct. And it was, I was only responsible for a portion of the equity and a portion
of course, but
the deal, but it's
long nights.
One thing I didn't have to do, and here's the thing, Antoine, is that with the mentor going out and he had his systems in place to find deals, there was one thing it took the burden off me having to find the deal. I could just rely on it. Well, I know I can trust my mentor. I can go out and he's got great deals and I'll just raise for him, because that's how you build that credibility. And when you go and approach those investors, it's not like, hey, it's Reed Goossens here. It's Reed Goossens and my mentor and his team. And he look at their track record, and that track record translates to me. And I've been talking about all this great stuff about real estate investing in the United States, multifamily, blah, blah, blah. Well, here's an actual deal, and here's the group that's going to go, and we're partnering with that group. Yeah. So
love it. Awesome. Yeah. That's great. And then, so what are you mentioned systems a couple of times. So I just started getting into multifamily. I bought my first building about a year ago. So I have a turnkey company that I run. So we do 8 to 10 homes a month, which produces good cash. And I use that cash to then go out and buy apartment buildings, which produce good cash flow. So I don't have to work 20 hours a day, right? So that's what I've been doing. And I've been starting doing that for me and my family. And my dad just quit his full-time job to join the business to help things out. So my brother joined beginning of the year. So it's become like a family business now.
Congratulations.
And thank you. Next one is my mom's the last one working full time, and so next year hopefully we'll get her out of there. But we started buying apartment buildings, and last year we bought a 20 unit, and then this year we bought a total of 70 units, mixed up between anything from 16 to like 24. And I just found a really sweet zip code or sweet area in Memphis that's kind of like here in LA, like Abbott Kinney-esque neighborhood, except without the price tag, and
or the beach.
Or the beach, But I started buying those units just because it was a really sweet area that I thought would appreciate long term over time. But again, very small deals, but we're doing it with our own money, not really going out and raising money at this point. We've raised, we do some JVs, maybe like $200,000 for a deal, but the rest we fund the rest of the deals. But we don't really have a system in place to go out and finding deals. Is Antoine emailing every single broker every other week and saying, hey, here's my proof of funds. Do you have any deal? Right.
Right.
Underwriting deals is Antoine sitting at a computer for 3 hours looking at all the deals of the week, So what systems have you put in place to help you throughout that whole process? Because, we have to look at 100 deals before we find one good one where the numbers, you know what I'm saying?
Yep.
So,
no, 100%. And so I'll talk to you exactly how I did. So to 3.5 years, back in 2015, I think it was, I brought on my first, from actually USC, University of Southern California, I brought on 2 undergrads who were studying real estate who wanted to get paid $15 an hour to underwrite for me as a side gig whilst doing university. So if you're sitting there today and you, Antoine, go out and freaking fire yourself. You shouldn't be underwriting. Maybe they get it to a 90 or 95% baked, and you've got to come in and do the last 5%. But just think if two underwriters can do 3 deals a week, that's 6 deals a week that you don't have to do.
Yep.
And it's about prioritizing what you can go and outsource for 15, 20, 30 bucks an hour even, to someone that you're not the bottleneck then. You can work on your business, not in your business. And that's really, really important.
Okay.
So that's exactly how I got started. From there, I still, to this day, I have 4 underwriters. I'm about to bring on 1 full-time as a full-time employee. But I've had about 16 or 17 underwriters over the years.
Crap.
Just come in and out of and I've set up the system. My underwriting spreadsheet has gotten better, more complex. I've spent thousands of dollars investing in the spreadsheet and the tool to make it do everything that I want to do, build the bells and whistles of it. And I have a standard operating procedure PDF that I give to everyone. Every new underwriter that I bring on, I don't use any more undergrads. I use people who a couple of years out of uni, probably earning 60, 70 grand a year, but they're the mid 20s, but they're actually working as analysts for real estate investment companies, and they want to earn a bit of money on the side. So I now go and use a bunch of these guys, and it helps me vet people that I might potentially want to employ, and one of them I'm going to employ.
Love it.
So it has benefits both all way around of freeing my time up, seeing who you want to employ, and really sharpening your pencils, sharpening your tools on your systems and making sure the systems are robust.
Love it. And then, so that's one part of it. How are you getting the 3 to 4 deals a week? So how are you getting the deals in across your desk now?
Yep.
And I know that there's a compounding effect. I've already felt that after we bought in the first building and people saw the case study I made, then deals started flooding. So is it really just that compound effect, or are you still constantly?
It is that compound effect. We're literally about to submit an offer on a deal in Austin, Texas, very hot neighborhood. Cash flow is not super great, but we're seeing this deal before anyone else is seeing the deal, and that's purely through broker relationships.
Yeah.
It's these yellow letters and stuff.
Oh, no.
They don't. We're in such a hot market that sellers who own pretty much anything over 15 units, even 10 units, they've got to be pretty sophisticated folks. They're not idiots. And so why would they go and sell it off market to you? They're going to go to a broker. We are now seeing broker listings before the rest of the market is seeing, because we've done 1,700 units with this one broker. Yeah. So they know where their grass is being fed, or their bread is being buttered, and they can come back. And they said to us straight up, it's like, you've got 1 week to underwrite this deal. If you don't want it, we're going to go out and we're going to shop it to other people. I was like,
done.
Underwrite the crap out of it. And we're getting feedback that like everyone keeps saying, this is your deal. This is your deal. Like we've got other people in who know about this deal, and guys, this is the market. This is the area you want to be in. Like, this is your deal. Make it work somehow.
Got it. Love it.
So,
okay, cool. And then in terms of, so that's good. So the deals come in mostly through compounding effect, broker relationships. You keep, feeding them, which they keep feeding you those deals. And then you have your guys underwriting the deals. Then they're submitting offers, and I'm assuming you do the final check, and then you guys submit LOIs, all that kind of stuff. Yeah.
So it's, it comes to me like 95% baked. Yeah. And as talking about the systems part of it, as I onboard a new underwriter, I will get them to underwrite a deal, review the PDF, and then I'll get them on a Zoom call or something, and I'll record it, and I'll share my screen, and I'll go through all the tweaks that I make in the model, because I know the model really well. Yeah. And I'm like, no, that's too aggressive on that assumption. I'll dial that back, and then that is captured, and they can use that. I can use that for other people onboarding, again, trying to capture those processes really quickly, so I don't have to explain myself 27 times over. And now, when I send a deal out, it comes back 2 or 3 days later from an underwriter. It's now approaching 98% baked.
Got it. Wow. Getting there. Getting close. Yeah. Okay, cool.
But I'm always going to be the bottleneck because I'm ultimately the CEO, and the decision comes to me.
Got it. So, Love it. Okay, cool. And then are those people working? Do you have an office space where people are working, or are you doing everything virtual?
Everything virtual, my friend. Life by design. Life by design. I've come from Australia. I just got back from a couple of weeks in Japan, and I'm about to go back for Christmas. As long as I have internet, I'm going to keep working. My business partner lives in Austin.
Yeah.
And this is the beauty of having a lean, mean. We don't do property management in house. We don't do construction in house. We do asset management in house, obviously, because that's my job. But could I go and control the property management and construction management game? Sure. But I know so many people out there, investment funds who own 5,000, 6,000 units, and they have 5 people on staff. That's all you need. That's all you need.
That's crazy.
When you're outsourcing the majority of the property management stuff.
Yeah.
1,700 units right now. We're going to go double the portfolio in the next 2 years. Maybe we'll bring on I think we've got to bring a couple of asset managers, a couple of underwriters, and we've already got an executive assistant. That's really all we need.
Love it. And then how did you get in touch with those? So I went to LMU actually, and I graduated 2017. So I mean, I know there's some job boards and stuff
fresh out of college, you're fine. You're relaxed. You've got 70 units. You're going to be fine. In 10 years' time, you're going to be fine.
I know, but I want it now.
Yeah, I know. Well, you're a millennial like I am. Like, of course, I want it now. But it's think about this, right? I picked up the book Rich Dad Poor Dad in 2009. I was 23. I'm now 33. You overestimate what you can achieve in a year, but you underestimate what you can achieve in a decade. Yeah. Did I think when I was reading that book, when it opened my eyes, that I was, in Australia after, traveling the world for 2 years, after meeting this awesome chick from America, did I think I'd be sitting on a call with you right now? The answer is fucking no.
Yeah.
excuse my language.
No, you're fine. You can swear here.
But the thing is, it's like you look back at that journey and you think, wow. And so what I'm now changing my mindset on is like, don't worry about what's going to happen when you're 43, because just open as many doors as you can, walk through them, and the future will figure itself out. Yeah. I've been pretty good up until date, touch wood. It's about living in the moment, enjoying the journey, because yes, we do want to have it all done for us tomorrow or yesterday. No. But sometimes you got to just enjoy that journey, and before you blink and before you know it, you'll be in your 50s.
Oh yeah. Yeah, I mean, if you told me 2 years ago that I would be flipping, I would be doing 8 to 10 houses a month, I would have, buddy. There's no way in hell I'm going to do that.
And that's where the negative self-talk comes in. Where you say, you're doing well, keep it going.
Yeah.
Thumbs up. Like, keep the process going. And little things like, I just went to Japan for the Rugby World Cup. I've never been in my entire life. I'm 33 years of age. I'm like, of course I'm going to the bloody World Cup. I want to, this is the point of living. I'm not going to wait till I'm 65 to do this stuff. This is the point of why I became my own boss, is to live life now, not live life in the future.
Yeah. Yeah. And that's why I asked you too, because we've been struggling as well here in LA. Like, real estate is so expensive, even office space. So we're battling against getting an office space and pulling everybody in. Right now, everybody's virtual. So everybody works from home.
Do it lean, man. Keep it lean for as long as you can, because you don't want payroll burden if you can help it. You can help it, or rent burden. And that's what, my business partner and I, we had I was down in Texas. I'm about to leave for Texas tomorrow, but about a month ago, where I was in Texas, we did a whole Gantt chart of what we love doing and what moves the needle. And then there's sort of 4 quadrants, like what you hate doing but doesn't really move the needle. And they're the new roles that you create for people, right? And there's payroll. And we looked at that and we said, well, maybe if we just work a little bit harder, we can save a bit more money than actually going out and paying someone, 6 figures a year to be on payroll. So, don't broke what ain't, don't fix what ain't broke.
Yeah,
So.
No, that's true. Okay, awesome. And then how did you? So the real quick, the USC kids. How did you? Was there a job board, or did you get in touch with somebody?
That's how you. A former colleague of mine at the development company that worked for Long Beach. He's gone out now to start his own ground-up construction company here in LA, Beach City Capital, and it's an awesome company. I've invested in a few of my own passively in a few of his deals, but he went to USC, and so he was able to get me on the job postings, and I was bombarded with how many people wanted. But if you don't want to do that, go up to Upwork.com. There's so many guys on there for $20-$30 an hour. They're half decent, you know.
Yep.
I pay $40-$50 an hour now, but that's because I'm getting better folks.
Understood.
So
great. Awesome. And then let's talk about finally your market. So you mentioned Austin, Texas, which I know has been, you know, very hot market. And I think I read an article last week that it was, they hit record highs on the single family home pricing and stuff like that. So what are your thoughts? Are you and your partner, who I know is on the ground, looking into other markets? Have you guys only done Austin, Texas thus far? And what are you guys
No, we've done
thinking?
so. A majority of our portfolio, 1,000 units out of the 1,700 is in San Antonio.
Oh,
we've got five assets down there, and we've got 2 assets in Austin.
Got it.
We started in San Antonio. Given that I come from a foreign country, I can have a little bit different perspective on what's happened in Austin. And Austin really has transitioned into a coastal city. It is high demand to want to live there, a lot of jobs, but low supply. And downtown Austin, the sort of downtown core, you know, you talk about downtown dirt like LA here, like it's trading for $250, $300 a square foot. Downtown Austin is trading for exactly the same amount. It takes 24 months to get anything entitled. It's liberal in a good way.
Yeah.
So there's high barriers for new product to get into the market. So when high barriers, but there's so much demand and so much demand for affordable housing, then the existing stuff means that you're in a good middle ground. You're not trying to be risky on the ground up construction, but you're investing in a market that's going to continue to grow.
Yeah.
Now, will it continue to grow over the next 10, 15 years? Yes, it will. Will it continue to grow at the same rate? Probably not.
Yeah.
And so that's why you've got to be we're doubling down on these types of markets, knowing that in 10, 15 years' time, the deal's going to go just fine.
Yeah.
We're also, looking at deals now that just the deal that I was talking about had only had 4% cash flow. It's very thin. It can also be a covered land play that maybe you can build a high rise in 10 years' time when zoning changes.
That's true.
We're looking at different things. I'm also looking at opportunity zone in Austin right now, where it's ground up construction. It's halfway through. It's going to have a C of O, certificate of occupancy, come end of summer next year. And we've got some folks who have some capital that is opportunity zone
ready,
compliant.
Yeah.
And we're going to go and we're going to look at that on Friday when I'm in Austin. So there's just so many different things that we're doing now and pivoting. But it started with a base of portfolio of multifamily.
Got it.
And we're just reacting to the market right now. And we changed the way we give returns to our investors. But back to your point of like the market, yes, historically, Austin has been a 8 or 9% cap rate market.
Yeah.
But you also got to remember, historically, interest rates are at 8 or 9%. So we're in a market now where interest rates are 1-2%, and so are cap rates.
Yeah.
I also look at Austin like I look at Sydney or London or LA or New York. High demand, low supply, cap rates are going to compress to the wazoo. So will they swing back the other way, pendulum wise? I don't think they might swing back a little bit, but I don't think they're going to swing back to 7 or 8% cap rates ever.
No,
ever.
Yeah,
so,
I agree with you. Okay.
Yeah.
Cool. I just wanted to get your 2 cents on that, because I went to Austin for the first time a couple months ago, and I was like, shit, I would live here. I mean, you know what I'm saying? So, and half the price of what I'm paying here in LA. So, and then what kind of, are you guys doing heavy value add projects still?
Medium to heavy, or really light to heavy. All things in between. We spend between $10,000 to $15,000 a door, depending on the assets. We're definitely going away from 19. We've never bought anything 1970s. We've most of our portfolios in the 1980s. But if you look historically at Texas and when things are built, after the 80s and the crash in the 80s, nothing was really built in the early 90s, and it sort of starts picking up around about 94, 95. So we've picked up, we've got a majority of like late 1980s build, but a couple in the early 2000s.
Got it.
But we're starting to, those older assets that are, built in the 80s are now 25, 30 years old. We want to start looking at things that are built in the early 2000s, which are now going to be 20 years old. Yeah. So they're now they are value add. Yeah. And so when we buy this new ground up construction, we'll hold it for 10 years. It's going to be value add for someone else.
Yeah. Got it.
The cycle continues.
And you mentioned affordable. So are you like, for example, I just bought a 24 unit. It's a 1-bedroom, 1-bath. The rents are $450 a month.
Wow, that's real affordable.
Yeah. No, but that's not market rent. But we're gonna renovate the units 10, 15 grand a unit and then make the rents $850 per month.
Yep.
So this is just a really bad landlord who didn't spend $1 on the tenants, right? So
Right.
is that kind of the same play?
Not as heavy as not as that's a great, you probably in that smaller vintage or smaller units you can get that massive swings. We're seeing about between anywhere from $75 to $150 rental pops on our renovated units, and we're spending about $6.5 grand on the units itself to get that rental pop. So not as massive swings as you're saying, but there is some meat on the bone.
Because for us, for those small properties, less than 30 units, we deal with a lot of mom and pop landlords.
Mm-hmm.
So they're just, literally the guy walks around the first of the month with a clipboard and collects the cash from the tenants, or a check. So those are, and one of these guys owned like 3 buildings in this really hot area. We bought the first one, we asked for like $10,000 concession. So really just made ourselves easy to work with because we knew he had the other buildings. And now we're under contract for the other 2 buildings, which close next year. Just because we're easy to work with. He didn't even want to sell them, but we're like, buddy, you can go and do a triple net and go retire and, leave Memphis and go to Florida, so. And
that's how we've got the same relationship. Not necessarily, you've got it with the actual owner.
Yeah.
We've got it with the brokers, and we've done, 1,700 units now, and we've done it so easily, and we haven't retraded and all that sort of things.
Yeah.
And everyone says we love working with the Wildhorn guys because they're just easy to work with. So the problem that you'll probably find is with that smaller unit size is trying to get decent property management, and 9 times out of 10 with that smaller size you sort of have to do it yourself. And trying to train people to pay on rent cafe, trying to make sure that it's not in cash so things don't go walk about, and then trying to attract those employees who are going to be boots on the ground that are going to actually add value to your team and not just be steal stuff, which can happen a lot in the smaller value add space.
Yeah. So what we've actually done for that space is because we had a turnkey, we've been doing turnkeys in Memphis. We started using the residential property. I was like, our first one was a 20 unit, and I said, hey, can you guys handle an apartment building? Hey, we've never done this before. We'll be upfront, but yeah, we'd love to do it for you. Okay, great. We'll go try it out. They killed it. We raised the rents from $500 a month to $850. And like all with their guidance and marketing, and the unit rented up like this, the first one. And I was like, holy shit. All right. We need to just keep, so, and then they've just been managing deal after deal after deal after that for us. And it's been working, really well thus far. I don't know how much more that they can, it's a bandwidth thing, right? So if they manage 400 doors but we're adding 100 doors a year, it's a big growth swing for them,
But in saying that, there's an opportunity to go buy the property management company out. Like, I know if I had to go and bring property management in house, I would go and acquire another one. I wouldn't want to go start it by myself.
Too. Yeah, I've always said that too.
And then that adds, you think of a table. A table is only stable, excuse the pun, with 3 or 4 legs. It's never not stable with 2 or 1.
Yeah.
And so acquisitions is only one leg of the table. Property management's a fee generating business.
Yep.
You could generate fees. It makes the tables more stable for the entire portfolio.
Yep.
So I would definitely advise if you start growing in Memphis and you get some scale. Maybe they want an exit. They still keep the people on and still keep the systems in place, but you go and acquire an existing profitable business and then go nuts.
Love it.
So,
Awesome, man. Well, thanks so much for coming on the podcast today. I learned a lot. And what is the best way for people? I know you have 2 books now. So you want to plug those in there and then plug your podcast and anything else?
So investing in the US just went #1 across the United States and internationally for commercial real estate. I think real estate sales and real estate itself. Awesome. It's called Investing in the US, The Ultimate Guide to US Real Estate. It is my story. It is all the best episodes from my podcast in this book, in and around my story. Awesome book. Check it out. You can check it out at reedgoossens.com. The second one just launched with actually me and 6 other Aussies. We started the Australian real estate mafia. We tongue in cheek, but we all came to the United States with when we met through my podcast, and we call it 10,000 miles to the American dream because we've all started successful real estate businesses here and achieved financial freedom through investing in US real estate. So this is the second one. Each of the boys we've all written a chapter each. So that just launched on July 4th as well, again at reedgoossens.com. So
Love it.
And if people are ever coming through LA, you can always hit me up. And that's at info@reedgoossens.com. And you can go check out my podcast as well on iTunes or wherever you podcast. So,
Love it.
Yeah.
And then how about your properties and your syndications? What are the best way to people learn about that kind of stuff?
Yeah, still keep coming through real estate. reedgoossens.com. There's learn from Reed or invest with Reed, and you can click either one, and what will get to me, and we can have a phone conversation and see what happens from there.
There you go. Awesome, man. Thanks so much for coming on. Appreciate it.
Hey, man, you're doing an absolute awesome job, Antoine, and keep up the good work, brother.
Thank you. Appreciate it.